Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending April 14th, 2023. Let's get into stocks. Equities rose across the major global market indices with the S&P up almost 1% at 0.82, the Russell 2000 added 1.54, and the NASDAQ was up 0.3%. Now, overseas, the developed markets, which is the EFA, rose 2.25% as the emerging markets gained 1.66%. Within the U.S., the financials and the energy were the best performing sectors, while real estate and utilities were the laggards. Of course, you can see with the gas prices and the oil prices, of course, the energy is going up. By style, small cap was the best performing subsector, while the small cap value was the laggard. So the growth was the best, the value was the laggard in the last week. Bounces back and forth, back and forth. Let's go fixed income. Interest rates rose and bond values fell last week with the benchmark 10-year Treasury yield rising 13 basis points to 3.52%. Now, core consumer inflation was the slightly higher than consensus estimate, pushing most interest rates higher. So, inflation that they say is transitory is still around. Yes, it's still not going as quickly as they would like. Commodities, get to the price of West Texas crude oil rose 2.14% last week to $82.43 a barrel. This marks an 8.93% gain since the end of March due to the announcement by OPEC on April 2nd that it would reduce oil production for the balance of this year, which we actually had our own. We really didn't need to rely on that, but that's what that is. Let's go to economic data. Inflation as measured by the Consumer Price Index rose 0.1% in March, below the consensus estimate of 0.3%, but largely due to a decline in energy during the month. Now, after excluding the volatile food and energy, the core CPI rose 0.4% from February, which was in line with the consensus estimate. Let's go about inflation as measured by the Producer Price Index, PPI, or wholesale prices declined 0.5% in March, following flat prices in February. Now, prices have been expected to remain flat in March as well, but after excluding volatile food and energy, the core PPI declined 0.1% versus the expectations of 0.3% gain. So that was better news. Let's talk about company news. Get into JP Morgan, which is a contrarian choice, core select, and a G50 holding. Reported results that exceeded analyst expectations. Management also guided this year's profitability slightly higher due to rising loan rates. Shares were up 8.83% for the week, while also, a lot of regional banks are getting hit, and people are moving their money to the bigger banks. Louis Vuitton, which is a G40 holding, shares touched a record high on Friday and closed the week up 8.58%. After management announced sales and earnings that exceeded expectations based on strength from both local customers and international travelers. Now, this included double-digit sales growth for its watches, its jewelry, leather goods, perfumes, and cosmetics, which is crazy. The price of the Louis, how much and people are just buying in droves, is really remarkable. Let's talk about Shockwave Medical, which is a G33 holding. That rose 16.49% last week after a government-issued proposal rule for 2024 inpatient payment rate for Shockwave products, which was higher than expected. So very good for the company, and you're starting to see it come back a little bit, so let's hope we'll see what the market holds this year. But that's it for this week's market summary. Thank you so much for being part of the ARA family. If you need to get a hold of us, call us at 855-756-5700. Visit us online, YouTube, Facebook, our website, aradvisorsinc.com, and make sure you're getting the newsletter. God bless you. Thank you so much for being part of our family, and we'll see you again next week.